Hello guys, how are you doing? Alright, so this is Peter, your lead instructor for Peter's Orb Academy. So this video is to guide you on the basic market structure, to explain market structure in the simplest form. This video is going to be detailed, but this video shouldn't last more than 10 minutes or so. Alright, please watch. So basic market structure will tell you that a market will eventually be creating an higher high and higher low, higher high, higher low, higher high, higher low. For those of you that are still new to Forex, what you should be understanding is that whenever the market is making an higher high and then comes back down and then make another high that is higher than that previous high, that's how we call it higher high. Means that it's higher than the previous high. So by the time the market will come back down and wants to go back up again, this high, new high, will be higher than this previous high too. So that is what makes you know that you are in an uptrend. That means the market is trending to the up direction. That's what uptrend means. The same thing downtrend too. When the market is trending to the down direction, the market will be making lower low, lower high, lower low. Meaning that this low is lower than this previous low, lower high, lower low. These are pure English terms. Easy to make the word this thing sweet, but you should be able to understand it. Those are theory they give us in, especially most Forex courses. But in real life, those are just theory. But in real life, market, it does not happen like that. Market always creates a systematic type structure of movement. In an uptrend, market tends to move in a direction like this because there are involvement of buyers and sellers in the market. Involvement of buyers and sellers in the market. So you cannot just expect market to just go like a straight line. No, that's not how market actually works. But now there's the juicy part of this thing. The direction to which there is a break of structure, whenever I see BOS, that is break of structure. The direction to which there is a break of structure, that's the place in which you should be expecting that that's the direction of the market. Let me break it down. Now, listen to this place. I want you to watch closely, please. The market that is making a series of, it made an high here, and then there was a retracement here. So, but the strength from this high was not able to push this market beyond this level. So that means this is a weak high. That means it's a weak high. That means it could not take the market beyond the previous low, beyond this previous low. So it could not take it beyond that level. But when the market got to this point, the market now went and broke this previous high. That was why you see me wrote BOS. It broke this previous high to this up direction. Eventually, that's why we call this low. We call it a strong low. So anytime you see somebody call something, before you can identify a low as a strong low, it must have broken a structure. It must have broken the structure of the previous structure. So when this market got to this point, it started coming back down. Yet it was not able to break this low. It was not able to go beyond this level. That means this is a weak high, WH. Let me just use WH. That means it's a weak high, in as far as it could not break the previous low. But when the market got to this point, the market went again and broke this previous high. That's why you see me wrote BOS. So that means it's a strong low, because why? It was able to break previous high. That's why you see they wrote BOS, break of structure. That's why I wrote it down. The same thing happens in the bearish scenario, in the downtrend, whereby market tends to make a series of lower highs and lower lows. Lower low formed an high, which is the lower high. The reason why you see me write strong high is because when the market will push from that direction, it was able to break this previous low. That was why you see me wrote BOS. So it was able to break this low to this downward direction. When the market will reverse, it could not go beyond this level. It was not able to break this point here. So that means it's a weak low. But when this thing got to this high, the high pushed it downwards again and broke this previous low. So that means this is a strong high. That is just basic market structure. We'll be going to the deep one now. Let's go. I hope you're able to understand that, please. I hope you're able to understand that. So please follow me closely, because this teaching is very sweet. Market structure. Whenever you understand market structure, you are understanding the body language of the market. Now, let's talk about three types of market structures. Three structures in the market. Now you have to pay very close attention. You see me wrote it here. We have the swing, we have the swing structure, we have the internal structure, we have the fractal structure. The swing, the internal, the fractal. Let me break it down so that you'll be able to understand. So swing structure is when you are looking at the market from a higher time frame perspective. In a swing structure, you use the higher time frame to view the market. Please, when you are watching these videos like this, you need to have your jotter so that you can be able to write some things down. Because why? They will help you whenever you want to make trading decisions. So in the swing structure is where you use the higher time frame. The higher time frame to make decisions. But then we always use 3 time frame for our analysis. Let me write them down. We must always use 3 time frame for our analysis. So let me say in the swing structure, we use the higher time frame, like that is, let me say, the 4 hours upward, 4 hours upwards. Depending on the kind of trader you are. If you're a scalper, your higher time frame can be 30 minutes, can be 1 hour. Depends on, if you're a day trader, you can use that. Different type of trader. So we have the internal structure. That is where you use the medium time frame, MTF. Sorry, how am I typing? That is maybe probably we are using 15 minutes downwards. Let's say if you use 15 minutes, then we have the fractal structure. That's when you are using probably like the lower time frame, like maybe let's say 5 minutes or 1 minute. Please, I want you to follow, please. So I said I just listed 3 time frame now: the swing structure, the higher time frame, the medium time frame, and the lower time frame. In the kind of trader I am a day trader, so I always use the 4 hours, the 15 minutes, and the 5 minutes or 1 minute. I use the 4 hours to know the directional bias. The direction of the market. Because if a person wants to trade, the first thing is you want to know whether the market is going up or is going down. You want to first see it from the broader perspective. You want to know what the bigger picture is. Then you have to now look at the small picture before you now look at the smaller picture. Because why? Every big step you want to take will actually start from a small step. Every big journey you want to take, you have to start it from a small step. So as you are also looking from a bigger picture, you must also try to look from the smaller picture. So in a scenario where we are having, this is the swing structure. The swing structure started from this point here to this point here. Because why? There was a break of structure. The swing point, any other thing that happens around this place is the internal structure. Let me come again. The swing structure, let's say we are on a 4-hour time frame. The market can come like this, form the low here, form the high here, and then form a strong. Then that means this high is a very strong high because why? It broke this previous low. That's why I see me go break of structure. Don't forget what I said earlier in the basic market structure I did there. The market came here and then stopped here. So eventually this will be our, because there was another break of structure around here too. So this will be our swing from this low to this high. The reason why you see us write weak low here is because this high was not able to, was not able to take out this high. You understand what I'm saying? So please still follow, please. So this is an internal structure. After the market formed the swing structure, this is a swing structure. when there was a break of structure to the downward direction. Now you know that the market on the swing direction, this market is a downward direction. So anything that happened here might just be internal structure. You might just be short-term buy, but the original trend of that market is downward. The market is going downward. So that was why you saw that the moment the market approached this area, what did you observe? The market came back down. Because why? The intention of every swing trading is to go in alignment with whatever the higher time frame is saying. So whatsoever you are doing within this area here, maybe when the market came here, you say you want to buy. Yes, you are buying, but it should not be for long term. You want to buy, but it should not be for long term. Because why? You already know that I've checked the swing structure of this market. This market is bearish, meaning that this market is bearish. Remember what I taught you that time in the basic market structure? I said when the market is forming a structure like this, and then if you break this structure to the downward direction, so that means the high is strong but the low is weak. So that means anything you want to be doing, the high will eventually be pushing the market downward. So if you get to another point, a stronger high will push the market downward again. If you go to another place, a stronger high will still push the market downward. So that means the original bias of the market will be sell. To sell. So we sell when the market is low and we buy. Sorry, we sell in an high price and we buy in a low price. You understand what I'm saying? That's just what I want you to understand about swing structure. So, but you see, internal structure is this one that happens on the 15 minutes time frame. You see, if funny enough, listen to this, please. Funny enough, the market might look like this. After the market came, the market might look like, after the market got to this point, let's say, yeah, you see the market, maybe the market now start going like this, sorry. You see the market start going like this on a 4-hour time frame before the market started coming like this. Let me do 3 to 3 here. You see the ticker line? That's how the market will display it on a bigger time frame. The ticker line will just look as if that's how. So that's how the market will look on a bigger time frame. I will think that there is no zigzag. There's no zigzag under it. But this is how the market will go on the moment there is you will switch to the smaller time frame. That's when you now begin to see all these things that are displaying. All these things. But in a bigger time frame, higher time frame, the market looks as if it's going straight and then coming back down. You will not even see all these go ups and downs that is happening in the lower time frame. That's why whatsoever you are seeing in a bigger time frame is what is happening on a smaller time frame. You understand what I'm saying? So fractal structure is the one we use for entry. A person like me, I always use fractal structure for entry. Whereby if I just sense that the market, see that the market has gotten to a low like this, and then the market came like this, and then it formed an high and then came back down eventually. And if the market breaks structure, remember any direction that a market breaks structure on that same time frame, be expecting a pullback. Anytime a market breaks structure on any time frame, expect a pullback on that same time frame. So that's why the moment this market broke this previous high, that's why the market still came back, a pullback, a retracement. So when the market go again, break this high, what do you expect? The market still came back. So whenever you see a break of structure, be expecting a pullback. You understand what I'm saying? So use this information, go and check your chart, and then use this information to see if all these things are actually true. So it's not look like maybe my own charts are different. Now let me go and show you on a real chart what these things that we have talked about, what they look like. What they look like. Okay? Alright, on a real chart, on a real chart, let's do it like this. You can see that we are on the 4-hour time frame. You can see that we are on the 4-hour time frame. Let's use like this. All right. On the good chart, you can see that we are on the 4-hour time frame. This is a live chart, okay? We are on the 4-hour time frame. See what the series of movement that this market is making. The market moved this way, came back down. See the market move this way, came back down. The market moved this way, came back down. Let me tick in the line so that you see. See, that's the movement that this market made. You see how simple it looks. Let me switch it to like maybe 15 minutes time frame so that you will see the same thing that this market did. I'll see how it looks on the 15 minutes time frame. Can you see what I'm saying? Can you see the kind of movement it was making on the 15 minutes time frame? So you see, the one I used to draw my straight line, which was the 4-hour time frame, is my swing structure. But see the kind of movement the market is making. Market going like this, coming back, going like this, coming back, going like this, coming back. That's how it keep making higher highs and higher lows. Higher highs and higher lows. Let me go back to. That's exactly what the market has been doing. In a big time frame, you will not know what is happening. You will not know that all these things are happening. That's why you don't need only the big time frame to trade. You also need the smaller time frame so that you can understand the behavior of the market even on a small time frame. Now, just go and check your chart. Go and check your chart. All these things that we have checked here, go and check if they are on your chart. Okay? Try to migrate between time frames and see if truly all these things really work, just like we've been saying they work. Try to see how it looks on the 4-hour time frame. But when we switch to the smaller time frame, you saw how the market was more detailed, telling us what happened behind the scene. That's how the market actually works. So this video is we are done already for this video. So thank you. Watch out for the next video.